Hey. So, welcome to the Wealth Training Group and also today's expert talk. I am Rosie Thomas, your host. And before we get started, if you can share the group, post on your page, let everyone know that we're here, we're live. Anyone is thinking about getting into real estate because we're going to be dropping so many gems and giving a lot of information. For those that don't know me, I am Shatanya. Everyone knows me as Rosie. I am the CEO and founder of Thomas Financial. Thomas Financial was established in 2009, and we provide tax preparation, tax resolution, tax education, bookkeeping, and we're the home of the tax pro planner. So today, I will be bringing two great and knowledgeable people in the real estate field. This group is designed to help you guys build your wealth and help you in the financial space. Every week on Thursday, same time every week, I will be bringing different people in to help you guys out. I know a lot of people have reached out to me in the past on one-on-one help but can't afford it. So I'm bringing this to you guys today. And the only thing I'm asking you guys to do is pay it forward. So, without further ado, we're going to go ahead and get started and bring in our two experts for today. So, we have today Jose Moore, a mortgage advisor. Jose, if you can tell us a little bit about yourself for the people that don't know you here today.
Yeah, appreciate the introduction. I'm thankful to be here. I heard a number of good things about your firm. You as a person, everyone has nothing but good things to say about you. So it's a blessing to be here. It's a blessing to be in your circle. So me personally, I don't know about a lot of you guys that's on this live, but I didn't come from a financial savvy background. My parents wasn't financially savvy, and finances was never talked about where I'm from. So, you know, I got in this field to be able to gain the knowledge that I can pass down to others. So you can be able to pass that down to others, and we can grow our wealth through the things that's not really talked about. So I'm a mortgage advisor. I've been doing this about 3 years. I started during the midst of the pandemic, and I've been blessed to be able to get my business to where I am now. I came to Dallas, Texas, without anything, without any connections, and I just hit the ground running. Meeting people like Miss Rosie, meeting people at networking events and just going out and growing. And that's what brought me here today, just that willingness to absorb the knowledge and meet new people and help others. It brought me to Miss Rosie and Thomas Financial. So, I'm excited to be here.
I'm excited to have you. Thank you so much. Your story is inspiring. A lot of people, I have some people that's going to be joining today don't know where to start, want to get, in the field. So hopefully help them out. Your name is ringing. I was looking for the best of the best. And your name was referred by some powerful people. So I'm so glad to have you a part. Next, I will introduce Miss Chloe Wallace. She's a realtor, and you don't know she's popping and she's doing her thing in the real estate space. Tell me a little bit about yourself and who you are.
I am Chloe Wallace, born and raised in Dallas, Texas. I have been doing real estate for 3 years now as well. My goal is to pretty much just get my people into owning property. It's definitely not about the money for me. It's really a passion for me. My goal is to simplify buying or selling your home, whether you're looking to invest. I want to have the knowledge to provide to my people and give back to my people and help us become landowners, homeowners, and take over this land, because it's a real blessing, and it really does build generational wealth. So that's what I'm here for, is to help you guys and make your process easier with understanding the home buying process, investing, renting. I even do apartments. Whatever you need, I am here for that.
Thank you, Chloe. Thank you, Chloe. I'm so excited. I'm so excited because I have questions too. I want to get into real estate. I've been looking at different properties, trying to find my way, and I have so many questions. So you guys will clear some of those undecisiveness of what I'm needing up today. Chloe, before we get started, how did you get started in the real estate space?
So, majority of my career for 13 years, I was a cosmetologist and a barber. Prior to that, I worked for T-Mobile corporate doing technical support. I even dealt with the refinancing and equity for Countrywide prior to that. So I've always been into customer service, making people feel good, making connections with people. And I'm also always into building careers that are recession proof, that nobody can ever take from me, and that there is no cap on how much I can make or how much success I can have or how much education I can learn. So I have been in that. I stopped doing hair about 3 years ago when I started doing real estate. I kept cutting hair for a little bit after that, but I was only doing house calls.
Okay.
Yeah, but I've always been a people person. I've always been able to connect with people, make people feel good. So I felt like when I didn't want to cut hair anymore or do hair anymore, I felt like real estate was the next best thing for me.
All right. Thank you, Chloe, for that. And just to let you guys know, I'm not bringing anyone on here for you guys. If I don't won't personally work with them, then I won't bring them on. I've had some experience with Chloe, really good experience, and also Jose. We will be doing business together soon. So both of them are very knowledgeable, and I use them. So I just wanted to throw that out there. They're good people, and they know what they're doing. And Jose, how did you get started?
Yeah, so my story was funny. Like I said at the beginning, that I got started in the mortgage industry in 2020 in the midst of a pandemic. So I was born and raised in Memphis, Tennessee. Left Memphis at the age of 18. Went to Central Arkansas to play football, so I have an athletic background. And after I graduated school, around 2017, so I'm giving y'all my age a little bit. Don't judge me.
Young and
Don't
doing
judge
it.
me. So I graduated school around 2018 and had several different careers, from a financial advisor to working at Enterprise doing rental car sales, and just working at the airport, to transitioning into law enforcement. And so it just came a point when I was a parole officer, that I wanted to buy a house. And I was in Fayetteville at the time, and I was driving around like, hey, I like that house. The house fits me. What's the price? 340, 360, 400. And in my mind, I'm thinking I have to put 20% down. And so I'm only making, 30, $40,000 at the time. And I'm like, how in the heck I'm gonna save up $60,000, $60 to $80,000 to buy a house when I only make 40? It's never gonna happen. I'll never be able to buy a house. So that made me want to find a job where I had more control over my income, where I had more control over my time, where the harder I work, the more I can make. The more people I help, the more I can make. And so that led me to applying to different jobs. I applied to, try to be a financial advisor again. That's what I had experience at. And I also applied to a mortgage lender job here in Dallas. And I just so happened to get the job. And I didn't know anything about real estate. I didn't know anything about mortgages. Like I said, I thought you had to put 20% down to buy a house. And that wasn't the case. Once I figured out, all the ins and outs to buying a house, is you don't need 20% down. You don't actually have to have 3% down if you qualify for certain down payment assistance programs. So that's really what drew me to the industry, was just me, trying to stay hungry and pursue, the finer things in life, if you will. And I came across this job, and it's been a blessing.
Well, congratulations to you both. So we're gonna dive right into it. As I know, and everyone know, right now real estate is popping. If you're not trying to flip some properties, build some homes, get an Airbnb, um, flips, like I said, and also your personal dream home. So it's so much. Oh, and don't forget, I'm a tax accountant. Tax breaks. There's some huge tax strategies and tax breaks when it comes to real estate. So I see a lot of my clients getting into it right now to try to save money and cut back on taxes. So we're gonna dive into all of that today. Now, before we when we announced this expert talk, we did ask for people to submit questions. So I'll go over the questions that were submitted. Once in between, if you guys have questions, go ahead and submit your questions in the comments, and I will ask those questions for you. We'll try to get all of your questions answered. And if you, whatever space, whatever you're trying to do, now's the time to ask your questions while we have a mortgage advisor and a realtor online. So, my first question, I'm going to start with my personal question. I'm looking into investing into real estate, but I don't know which way to go. And it may not be a right or wrong answer, but I'm looking at flips. And then again, I'm looking to purchase um, a personal property and rent it out. So, my question to you, what is the most profitable way to do it?
I want to try to answer this and see if I'm right. And then if I'm wrong, Jose can correct me because I want to know these things for my people and my clients, right? All right. So I would say at this point, you don't have to wait a year for tax exemption anymore. You can dive into that right away. So I would say, especially if you are a first time home buyer, you can go into that FHA, only have to put 3.5 down, and buy you a multifamily, buy you a duplex, buy you a quadruplex, whatever you want.
Definitely.
Live in one of them and rent the others out,
Okay.
and then go from there. Now, Jose, and that's all because the rates are going to be lower.
Okay.
You're automatically you're living there, so you're able to get that tax exemption. And you're also still able to rent out if you got a duplex, that one other property, if you got a 4 unit property, those other three. So I would say take that route. Jose, am I right or am I wrong? Or am I kind of right?
Yeah, like Rosie said, I mean, there's really no right or wrong answer to how
Right.
you get started in real estate. And I often tell people this all the time is, real estate is not a one size fit all. What works for somebody else may not work for you. Everybody's situation is tailored to what their specific goals are. So, that's one of my favorite ways to get into real estate is if you can find you a good multifamily, that's the quickest way to start some cash flow. That's the easiest way to get in it in terms of money out of your pocket because you can do 3.5% down with FHA. You can get up to 6% in closing costs from a seller. So if you really, really want to start your cash flow with using as little money as possible, the duplex or multifamily up to 4 units is the perfect way to go. You can't go wrong with that.
Yes,
Now,
I would recommend it. If you can afford it, I would definitely recommend because you only get one time to get that 3.5.
right,
So you gotta take full advantage of that.
I ran into this. So I have my first home already, right?
Mhm.
So when I went to the bank, I asked, I want to purchase another home for an investment property. If it's investment property, is it a higher down payment, a higher down payment and higher interest rate? But it is some type of loophole that I can take to prevent from
I'm gonna see
paying
if
that high down payment and that high interest rate.
I want to see if I'm right. So even though you have your FHA loan, you can still have. Is it up to 10 conventional loans under one LLC? Is that correct, Jose? Is it still
yeah.
that
So
way?
with conventional, most times it depends on the mortgage company too. Some companies will only give you a certain amount of loans
Right.
and expose yourself to a certain amount of risk. But with conventional loans, you can do up to 10 properties. The
Mhm.
thing with investment properties is there's so many different ways to gain an investment property from just your traditional financing, like conventional, to creative financing, maybe using some sort of hard money to non-QM type of loans where you might not have to show any income documentation. But when it do come to investment properties, um, there's creative ways to gain them when it's come to you trying to not do 20% down. Conventional actually let you go as low as 15% down. You can use equity from your existing home to do that. Rather, you pull out a HELOC, or if you do a cash out refinance to use that equity to buy that new home. So it's creative ways to get it done. It just goes down to what you have, what the goal is, and how do we get there.
It is, and if you go that conventional way, you will have a lower rate, right?
Okay.
Yeah, because
So
anytime you go
I don't
straight
have
in,
to pay a high down payment.
right? Because anytime you're going straight in and you letting them know you want to have it as an investment property, you're going to have a higher rate.
Yeah,
Okay.
and the reason behind that is, how long have you had your house, Rosie?
Like a little over a year. It hasn't been long, but
Okay.
I get calls all the time. I do have a lot of equity in my home to take out a loan. But my fear is having a loan, having to pay the HELOC back, the home equity loan back, and then also having to pay the mortgage on the new property. So that's what I'm worried about. So I'm thinking hard money will be better for me versus taking funds from opening up another loan on my home, pretty much. And
Okay.
I could be wrong. That's why I'm
And
bringing
most
it up.
successful investors that can't afford it, they're gonna go cash all day. That's what
Okay.
me as a realtor. That's what's been turning me up. I've lost deals because of investors because they're gonna go cash all day because that's what they do. They've already established their ground. They have a few properties making them money. So now they're hungry and they come in and they're offering above asking price cash because
Okay.
if you're doing investment and you can take that route, that's the best route to take. You don't have to worry about rates. Of course, if rates drop or anything like that, and you do take a loan, you always have the option to refinance those things.
Okay. I have somebody that's asked the question while we're on this. How do you feel about Section 8 as a buy and hold strategy?
It really just depends. For me, I'm always going to come from a numbers perspective because I feel like as an investor, that should be your main priority. We don't buy real estate to lose money. So if you buy a Section 8 property, you want to make sure that the numbers make sense for you because if you're thinking about a Section 8 buyer or a Section 8 tenant, it's somebody that's low income. So you can't go out and, find you a house that's $400,000 or $500,000 and thinking you're going to get somebody with Section 8 to continue to pay that mortgage. They're not going to be able to afford it. So you need to buy something that's specific for a Section 8 or tenant. And that may be, a house that's around 150, 185, 200. But you want to make sure those numbers make sense. So Section 8 is a good, consistent income when it comes to buying homes. So you can't go wrong with that. But you just want to make sure you have the right strategy to where you're not disappointing yourself when it comes to the numbers that comes with Section 8. Because truth being told, you're not going to get a whole lot of money out of Section 8 because there are low income tenants.
Okay.
Yeah,
Okay.
I piggyback on that. If you are going to try to go Section 8 route, you want to do some multifamily, something that you probably not putting too much into.
Okay.
Yeah.
Okay. So I kind of get what you're saying. So if you're getting a property for Section 8, you need to make sure it's affordable or it's not expensive. I'm in Dallas right now, and the market is crazy. So you can make your money back or profit, right?
Right.
Exactly.
And the first section, I get clients come to me with section vouchers, and they're very particular. There's certain amounts for certain area codes.
Okay.
It's a lot of breakdowns to that. Certain amounts for different area codes, different amount of bedrooms, things like that. So you definitely, I'm not saying don't do it, but like he said, don't think you're going to have a $500 home and get a Section 8 person coming in and renting that, because more than likely they're not going to even get approved to be able to afford something like that.
Okay. Another question, and you may not know this, but what are some up and coming cities or neighborhoods right now that have pretty decent prices on their home that may,
Oh,
of course, do you know any?
that's my job to know that, baby. You got Aubrey. If you're talking about up north, you got Aubrey, you got Little M, you got Princeton, you got Wally, you got Sashi. What is it, Sashi? I'm country, y'all. So
Sexy.
you know what I mean? You got Forney.
Okay.
You got pretty much any rural areas, but especially north, I would say all of those areas I name a good area. Y'all know we have the new Universal coming here. It's already written and wrote. It will be here by 2025 at the latest. So all those areas that I just named to you are within 30 to an hour away from there. So it's a very great area to invest. Because once that Universal get here, we already have the PGA on the north, which I'm sure a lot of you guys have heard about. If you're looking to invest, it don't get any better than those, especially those Aubrey, Little M, Allen, McKinney. If you want to go farther to save even more money, Princeton, Rosie, Sashi, all of those rural areas that are close to the main north areas can't go wrong.
So y'all take notes of that.
I would definitely Aubrey, and I live in Aubrey. And I live in Aubrey, and I live right off of 380, and that's where the PGA is. And Aubrey, I'm telling y'all, that's a gem. Aubrey is a gem.
Do y'all hear that? You better grab you some property in Aubrey.
They got them roads out here too. So if you want land, acres, you're talking about acres, we have the farm market roads out here in Aubrey. So if you and there's several homes for sale. I tour them all the time. I'm starting to do more with getting up in my game with giving you guys tours of beautiful homes with acres and areas. So Rosie, I'm definitely working on that, and I'll be able to start posting that in the Facebook, just tours of homes and properties. But yeah, if you're looking for land, if you're looking for more bang for your buck, far up north is a great plan.
Okay. Jose, were you trying to say something?
Yeah, because I got a testimonial for this is a client that I actually just closed. It's a very unpopular opinion, but she bought a new construction house in South Dallas, and she wanted a contract for it's a low income neighborhood. She wanted a contract at 235, I believe. We got an appraisal done on the house, and it appraised at 280. So she was walking in with nearly $50,000 in equity. So when someone says, where should I buy a house in an up and coming neighborhood? To me, it's subjective. It all depends on what position you are in life. You know, some people may need to be in a safe neighborhood. Some people may need to be in a house in a neighborhood where, you know, it's close to schools. But this specific client, she was a single lady. She's from the Dallas area. She was comfortable with the area she's bought a house in. She was familiar with it. And she got the luck of the draw, getting a house at 235 and appraising at 280. I mean, she can sell that house, you know, in 2 years and easily have 6 figures in net worth.
And I 100% agree. South Dallas, they done tore down my projects. I'm from Bunton. My projects are gone, and it's a little market there now. So they're trying to expand that downtown into South Dallas. So that's definitely a great investment area, you know, if you want to be up south, you know, like you said, you don't have as much money. Yeah, that's a great area.
Okay. So what we're gonna do, we're gonna take a quick break. Y'all submit your questions in there. I have some, and we'll be back to answer all of your questions. So we're gonna take a quick break, and we'll be right back. Stay tuned. Okay, we are back. Let's bring on Chloe and Jose. I did have a chance to look in the chat, and I'm going to make sure we answer your questions. 1 second. Okay, so I'm gonna go through the chat, and I'm gonna ask some questions before I go to the other question. So someone asked, for investment properties, do you have any suggested areas in the South, like past Glen Heights? Any areas where they can purchase property or a home for cheap?
Like I said, you got Forney, you got, like I said, any place that's going rural, right after on the outskirts, check there. You know, so if the popular place is downtown, you want to check South Dallas, right? Like you want to just go on the outskirts, but still be as close to wherever you're trying to be. But yeah,
I know Midlothian is a good one too.
Yeah, Midlothian is great. I actually have family that have nice properties in Midlothian. That's right outside of DeSoto.
Yeah.
You know, so anything that's rural or right on the outskirts, that's it. You know, I can go through and name them all. They're all. Mesquite is a good area to check into when you're looking on the little outskirts of Mesquite, Sherman. It's a lot it's a lot. Any of those rural areas are going to be, you're going to get more bang for your buck. And anytime you're getting more bang for your buck, you're building more equity, and it's a good investment.
All right. Well, thank you for
Yeah.
that.
And I would
Next question. Oh, go ahead.
Yeah, I was going to say on that, if I were you guys, I would join because Dallas have a lot of investment groups. You'll find a lot of wholesalers, a lot of off-market properties. Look for those investment groups on Facebook to find those off-market deals that you might find a distressed seller that has to sell. You might find someone, I hate to say it, but you might find someone that just passed and they pass their property on to an estate that doesn't even live in Dallas, doesn't even know the market. So it's like those type of groups that you get involved when you find those sweet deals that you wouldn't find otherwise. So I would encourage, if you're looking to get an investment and you're trying to find some cheap properties, look in those investment groups that you can find here in Dallas. We have a bunch of them.
And let me plug myself.
Elaborate.
If you're a real investor and you really trying to do that, I have a whole system that I pay monthly for. And it finds people that are under foreclosure, that have 2-3 mortgages, people that just pretty much going through rough times with their property, to where even though their home is not on the market, if we reach out to them or if we reach out to their prior agent that they work with and say, hey, we coming with an offer of this much to take this problem off your hand. A lot of them are desperate. And so I have systems to find those properties, FYI.
Okay, good. Can you elaborate a little bit on wholesaling? Because I hear it all the time. What's the benefit? Like, what is wholesaling? Why should people, use it? What is it?
Yeah, so wholesaling is basically, what's a good way to put it? I'm not a guru at wholesaling. I personally never done wholesaling, but I network with wholesalers all the time, and they somehow always have off-market deals that they're ready to offload. So basically, when you wholesale, you kind of like a middleman. You put a property on a contract with intentions on selling your rights to the contract to the next person. So if you get a house, seller say, "Hey, I'll give you this house for 150." And you run your CMAs, you know that, hey, after you fix this house up, you can sell it for 250, 300. Wholesaler will tack on, an extra 10, 15, $20,000 to that investor that will take that spread and they'll make their money off of it. The seller makes their money off of it. That's pretty much what a wholesaler is. It's like a middleman that puts a property on a contract and sell the rights to the property to an investor.
Okay, thank you for that. I heard a lot. Do you guys know anything about container homes in South Dallas? Maybe how much they're running and how much you have to invest to get a container home versus building a home?
Me personally, I haven't really seen any container homes. The only thing that I've seen that's close to a container home, and I don't know if you guys have seen this as well, but in Grand Prairie, it's a company that's starting with some like prefab homes. Prefab is kind of like a modular home where they build the house off site and they bring it to the property and they start putting it together. With those type of homes, they are a little bit cheaper in the area, but it just depends on what the purpose is and what you want. Because for me personally, I wouldn't want to buy a house that was put together off site and brought here.
A piece of land, but then the majority of those are on the rural outskirt areas as well. And I can definitely look into that. If you want to table that question, I can try to find out more about it. But from what I do know, a lot of those are in rural areas, and just like he said, you're pretty much just, to me, getting an unstable home.
Okay.
Yeah, and you have to be careful with container homes too, because neighborhoods do have building codes. So some neighborhoods you may have to build a minimum of 1,200 square foot. Most container homes, they're very small. They can be anywhere between 600 to 800 square foot. So you also want to, like, if you're looking at the container home route, make sure you do your due diligence and know that you'll be able to get financing, because those type of properties you're not able to get traditional financing, so you have to go a creative way or buy cash. But also you want to make sure that you're building something that's to code and not just putting something on a piece of land to where you won't even be able to sell it.
Yeah, that would probably be a hub. No, if even hub would work, but I know they do mobile in rural areas, but I'm not sure about container.
Okay. And I have two questions pertaining to getting into real estate. How do you start in real estate and like getting licensed and working for a broker?
You start in real estate by going to school of your choice. You definitely have to get licensed. I personally went to Champions. I went on campus. I didn't do online. I'm a hands-on person. I need to be in the classroom and really sink it in. So I didn't, but you do have the online option. If you're really focused, you can be done with real estate school in 6 to 8 months. If you do the work. And then after that, uh, and also normally when you're in real estate school, a lot of brokerages are up at the school to recruit. So you will get to have a lot of meetings and consultations with brokerages, a lot of good brokerages trying to recruit you because that's how it works. So, and if you don't, for some reason, find a brokerage at your school, or if you're online and you didn't have the opportunity to have brokerages to come in and speak and try to recruit you, at that point, you definitely, I would just say you have to do your due diligence and then go in and interview with a brokerage that you think is a good fit for you.
Okay, thank you for that. Next question. What legal structure do you recommend for a family-owned real estate business? Do you recommend like a LLC? What do you recommend them having if they wanting to um, start in the real estate business?
Most
Yeah.
investors. Go ahead, Chloe. You can take that one.
I would say, yeah, you better, yeah, LLC. Like I said, if you do LLC, you can do the 10 conventional under that one LLC, open up another LLC, do 10 more, just run it LLC. But I don't know, Jose, you might have an additional answer.
Yeah, I was going to say most real estate investors I've worked with, majority of them have them under an LLC simply because with an LLC, you shield yourself from all the risk. It's easier to put together the incorporations with your partners, and so it just gives you the most protection on an LLC. Now, some investors choose to do, like a sole proprietorship or something like that, but really just depends on how you structure your business. But most people that I've worked with, they use LLCs to put their properties under.
Yeah, especially if it's a family, because sole proprietorship, that's more like if you want to do an individual thing, I would say. But yeah, definitely if it's like a family business, yeah. Because even if you start out doing sole proprietorship, you'll eventually find out that there's more benefits with LLC and switch over anyway.
Yep.
Next question. I have Brianna. She's a newly licensed realtor. Congratulations.
Congratulations.
Best way to market to get clients?
The best way to market to get clients is hustle. Do not purchase. I mean, I ain't gonna lie. The brokers I'm with, they automatically offer us certain lead generation companies like Prime Street or Op City. But honestly, child, I done got about 90 some leads and ain't none of them good. They send you people with bad credit. They send you people that, just because you want to buy a house don't mean you ready to buy a house, So they send you a lot of unqualified people through those lead generations. So if you probably are not going to be too satisfied, you have to get out and hustle. I think that's one of the good things for me switching over to real estate, because I was already a barber and a cosmetologist. I already was kind of, popular, know a lot of people, word of mouth, to where I feel like, okay, I can do this. I know enough people, and I'm not shy.
Okay.
Not to mention, I also work for attorneys where I recruit their damn clients. So if I'm recruiting their clients, I better be able to recruit my own clients. You really just have to have that hustle mentality, because your real estate career is only as good as your hustle.
Yeah. Networking too.
Yeah, your networking. Yes, your networking. Your network is your best work.
Yeah.
And your hustle, what you put in is what you're gonna get out. Always you want to start with your family. Now you got your license, send the black text message out to everybody in your phone. Continuously post on Facebook, continuously post, run ads. Now at running ads, I can say I ran some ads on Facebook, and if you're going to do those ads with real estate, you want to make sure you're targeting your area. You want to make sure you're very specific with what you're targeting, because I had ended up getting a lot of crap. A lot of BS. It was a waste of money. But some people market through Facebook and they do well. But they also pay marketing campaigners that know how to do that. So that's an option. Hiring someone to market for you. Virtual assistants, people that's going to put in that work for you if you feel like you can't do it or you have another job. But other than that, you're going to have to hustle. You're going to have to network and you're going to have to hustle. And word of mouth. So always be, if you are a realtor, you know about fiduciary, you know your fiduciary right. Always be great to your clients. Always be truthful with your clients, and always have your clients' best interests at heart, and do the best you can to make their transactions as seamless as possible. And believe me, that word of mouth is the best out of everything.
Thank you for that. And I have, let's see, I have Sham on the line. She is a new loan officer. Any advice on how to get going outside of online marketing?
Yeah. So first thing, don't discredit yourself from online marketing. I was huge on online marketing during COVID because really that's all we had. And now that everything's back to normal, online marketing can get a little bit oversaturated, but you still can't go wrong with it once you find your niche and your audience. But another thing that I was big on was getting out networking. The thing about real estate is any and everybody wants to eventually buy a house. So you don't have to limit yourself to just going to networking events that's about real estate. You can go to networking events that's about tech, insurance, doctors, the medical field. So you can go to just about any type of networking event and just introduce yourself, be friendly, make connections. In person is the best way to get your name out there and get that word of mouth going, to get your referral business going. So if I had to tell a new loan officer the best way to get going, I'd say find as many networking events that you can find in Dallas and make sure you're attending all of them, passing out cards, and don't be shy.
Thank you. Okay, guys, let's give it up for Sham and Brianna. They both then took a huge leap. And if you they new to it, we got the experts here. If y'all need any questions outside of here, they have an open door policy. You'll be able to ask them questions. But congratulations, Sham, and congratulations, Brianna.
Congratulations.
Yeah. So now you're welcome. So now also I just wanted to point out a few things. Everybody know I do taxes. I'm an accountant. Outside of just contacting the realtor, getting a mortgage advisor, loan officer, you do have to make sure that your business is in order. When I say your business is in order, your personal credit has to look good. From my understanding, you have to have at least a 620. And also, if you're a business owner, your taxes need to look good. I take pride, and I'm pride on my business owners. I'm always coaching. I'm always fussing. You cannot always get a tax return. If you're trying to take your business to the next level, you're trying to get investment properties, you're trying to move into your dream home, you have to report your income. Because if you don't report your income, then you're going to look broke when you go to these banks. They're not giving you nothing. I don't care if you show your bank statement. Now, there are bank statement loans, but I know for a fact with that bank statement loan, it comes
higher rates, higher down payments.
Yeah.
I'm working with a client like that right now because he made it look like he lost a lot more and he really made a lot more. So now he about to have to put a bigger down payment down for a bank statement.
Yeah. So I'm saying this to say, get your life in order. How many people on this live today is trying to purchase their dream home within the next 2 years? Let me see some fire. How many people on here is trying to purchase their dream home within the next 2 years? Can I see some fire? I had to hit it. Every time we have a webinar,
I was waiting for it. That's what I laughed.
And I know y'all was waiting on it.
Can I put some fire in here?
So you guys need to set some goals today. Today, you need to set some goals. If you're a business owner, start reporting income. Forget all that trying to get a income tax back and not want to pay the IRS. Get you a good accountant. There's ways to roll money back and those deductions back into your net income and still lower your tax bill. So that's one of the things I want to speak on. Next week, I will be bringing on some people in credit. So we're going to be helping you guys, especially you guys with the fire in the comments. You need to be on there. We're going to help you get your affairs and your life in order. We're going to work on this credit. We're going to work on these tax returns. We're going to work with Chloe, and we're going to work with Jose, and we're going to get y'all house.
Damn.
You said something there. You said something there. Getting your affairs in order, and you can't get a refund every single year because a lot of business owners they don't know that.
Save your money. But I don't care. Every time you get paid, put something aside for your down payment for your home. Even if you're able to get the seller to pay towards your down payment or pay a portion of it, you're probably going to need to pay for appraisal. Or you may not need to pay for appraisal, but you might got something that needs to be done. So save, people.
So I'm gonna tell you, I'm gonna put y'all in my business a little bit. I'm embarrassed. I was embarrassed to say this, but I got my home now. I had the money. Money wasn't an issue. Me and my husband I'm just jump up one day. We're gonna buy a house. We wrote off everything, including our back seat. We can't get nothing. We got plenty of money in our bank account. We can cash out the house if we want to, but we ain't doing it. So we walk in there. We want this loan. We want to get a house. They looked at us like, you show that you make $50,000 a year, and you want a $500,000 home? No, ma'am. Credit was good, money in the bank. They weren't trying to hear it. Hurt my feelings. I'm gonna be a boss and I can't buy a house.
Yeah.
So money, I mean, you can cash it out if you want to, if you got it like that. But that showed, I mean, we was embarrassed. We was telling everybody we about to buy a house, so we had to wait 2 years. 2 years worth of tax returns, and I had to take classes, making sure I know what I'm doing. But we were able to report income, didn't pay nothing back to the IRS. I think you got a refund for 2 years because we learned strategies. But you have to have your stuff in order when you go into them banks.
Yeah.
Rosie, can I give you your flowers really quick? Because you're the type of person that business owners need to work with, especially when it comes to them buying a house, because you know from experience how having too many deductions can hurt your home buying process. So if you're working with a tax preparer that doesn't know anything about buying a house, they're just going to write off a bunch of stuff and show that you got a $50,000, $60,000 to $70,000 loss, so you can get a $10,000 refund check. And then you come over to me and I'm telling like, hey man, you don't show any income on your tax returns. People like Miss Rosie can help you plan for that because she has an experience.
Yeah. So thank you for that. And I do, like, everyone know, like, if I don't know anything else, I know taxes. I've been doing this 20 years. Most of my clients are business owners. Most of them are business owners, and I kind of I put them together because we want to get this business funding that's out. We want to get these homes. We want to invest. And the number one thing they're going to ask for is your tax return and your credit. So we have to get our stuff in order, y'all. Yeah, I'm fussing. I'm sorry, but it needed to be said.
Yeah. Because if you don't hear that, you're gonna be waiting, or you're gonna be out of a lot of money.
Yeah.
The wrap. So yeah, pay them people.
Yeah. So we're getting ready to wrap up. I want to give both Jose and Chloe to leave some tips with you guys today. I know it's something that maybe they get asked a lot, or something we didn't talk about today that may help someone on this call out. So I would like for you guys to provide one, if you could provide your information to them, your social media, how they can contact you, and then also let's leave everyone with a great tip. Who wants to go first?
Ladies first.
Absolutely, you right about that. My advice to you guys would be to save. Like I said, save, prepare. Pay your debt down, because that debt to income ratio is also a major thing. If you know you're about to try to buy a house, pay all of your credit cards down to where you at least don't owe any more than 25% of whatever the balance is if you can't pay them off, because debt to income also plays a big a big factor in that, because you can make the money and your taxes can show you make the money, but if you're spending all this money on bills, you're buying new cars, you're doing these things, you still won't be able to get a house. So that's an important factor I would say to watch out for. And for those of you that want to know, basic approval for mortgage can be anywhere from 580 to 620 credit score. So prepare yourself for that. And the way you can follow me is my Instagram is at Chloe Wallace Real. What is y'all? You know what was my Instagram? Hold on. It's Chloe Wallace Real Estate, I believe. Hold on. Yeah, Chloe Wallace Real Estate. So that's at CHLOE WALLACE Real Estate. That's how you can follow me on Instagram. You can also connect with me in our Facebook group, because I'm posting there every Monday. And that's about it for me. And I'm here for all you guys. If there's any way I can be of assistance or answer any questions, feel free to reach out to me anytime.
All right. Thank you, Chloe. Everyone, let's give Chloe a hand clap in the comments. Let's give Chloe a hand clap in the comments.
Can we see some fire?
Can we see some fire?
Some fire. Can we see some fire?
Where my fire at?
Oh, Chloe. Okay. Hand clap, fire, we'll take it all.
We'll take it all.
All right, Mr. Jose Moore.
Yeah, so I'll try to keep it really simple when it comes to, when you get ready to talk to a mortgage lender, just think of 4 things. And I call this the 4 pillars of a mortgage loan. You can think of it like 4 legs to a chair. If you don't have one leg on your 4-legged chair, the chair is going to fall apart. You're going to fall out the chair. So first thing is going to be credit. Like Miss Chloe said, you have to at least be at a 580, but I recommend 620 to 640. The higher your credit scores, the better your chance for an approval. The second thing is going to be your income. What do you make? How much do you make? What's your pay structure? Are you W-2? Are you salaried? Are you hourly? Are you self-employed? That third thing is going to be the assets. How much money do you have in the bank? How much can you put down? Your minimum down payment is going to be 3% if you're a first-time home buyer. On conventional, you can go as low as 3%. FHA, it's going to be 3.5%. So make sure that you have your assets in order. And then the fourth thing is going to be just the collateral. The house that you're buying, it can be a single family residence, it can be a townhome, it can be a condo, it can be a 2 to 4 unit property. And that's pretty much the basic of qualifying for a mortgage loan. If you take care of those things, income or credit, income, assets, and collateral, you'll prepare yourself to win in the mortgage process. You guys can follow me on Instagram, More Home Loans. That's my Instagram handle. So it's my last name, More Home Loans with an S. You can contact me on my cell. I give all my clients my personal cell number because the mortgage process is very hands-on and clients need to have direct access to their mortgage advisor in case we have to get something done that's time sensitive. So my cell phone number is 901-297-1114. And if you guys want to go ahead and apply, you can just go to moreloansbyjose.com to start on the application. I'll get you taken care of, get you on the phone. We'll have that mortgage consultation and we'll get you ready to buy a home.
Thank you, Jose. Can we see some fire for Jose?
I have seen a lot of fire. I was like, okay,
can we see some fire for Jose? Thank you, Jose. We need to see the fire. I know y'all tired of the emojis. I need to make sure that they're bringing it. How y'all feeling good about today? Each and every week, set your calendar, set your time. We're going to be on here every week, giving you guys game, dropping gems. Someone every week is going to come on here to help you guys in the financial space, in the credit space, to better yourself. Anything that we can give you to be successful. If you know anyone else that needs this, pay it forward. Send them to the group. Build the group up. Even if you have something that can help someone in the group, let us know. Send me a message. You can post it. You can help them. This group is to help everyone out. So if you want to, if you don't already follow me on Instagram, Thomas Financial LLC. I'm on Facebook, Shatanya Thomas, SHATONYA Thomas. And if you're looking to get into the tax industry, I'm that person. Website is Thomas Tax Academy. I thank you guys for tuning in tonight, and I'll see you next Thursday.